Live ayo.
Illa start kodutilla sir.
Start kodu.
Okay.
Respected members, students, and all the participants for the webinar. In continuation of our first program on direct taxes, this is our second session given by our dear CMA Sri Abhi Thomas sir. So before starting the program, let us play our institute anthem.
असतो मा सद्गमया तमसो मा ज्योतिर्गमया मृत्युर्मामृतं गमया मा सद्गमया तमसो मा ज्योतिर्गमया मृत्युर्मामृतं गमया असतो मा सद्गमया तमसो मा ज्योतिर्गमया मृत्युर्मामृतं गमया ॐ शान्ति शान्ति शान्ति.
Now we are going to start our program. I think there is no interest required for our respected speaker, Sri CMA Abhi sir. I am making him live now. Welcome, sir Abhi sir. Please start your program.
Thank you, sir. Thank you for giving me this opportunity.
Okay.
Can you hear me, sir?
I am sending you live now, sir. Okay.
Yeah. Good evening, all. Let me first, before starting with the subject, let me first once again thank Trivandrum chapter of Institute of Cost Accountants of India for giving me this glorious opportunity to present a webinar, or we call it a webinar. Now, the subject given to me is with respect to filing of income tax returns. The last Saturday, or in the first session, we discussed about the income tax website, income tax indiaefiling.gov.in, and we discussed about filing of ITR also. Today, what we are going to do is, before starting with the filing of ITR, I am told that there are students also in this webinar. So I want to introduce or make them aware about what is there in the income tax website, so that in future they can study from the website, they can also use the website. So let me share the income tax. Let's go to the income tax website. So please permit me to share the income tax website. I hope you can see this. Prabhu sir, can you see the window, please?
We cannot see, sir.
Sir, Abhi sir, sir, desktop ആണ് share ചെയ്തേക്കുന്നത്, sir. Could you please share the file, sir? അബിസാറിന്റെ ഡെസ്ക്ടോപ്പ് ആണ് ഷെയർ ചെയ്തേക്കുന്നത്.
ഒരു 1 minute.
അവിടെ നോക്കുന്നുണ്ടോ? ഇതൊരു കുഴപ്പമൊന്നുമില്ലല്ലോ.
സൈറ്റ് കാണുന്നില്ല. സൈറ്റ് ഇൻകം ടാക്സിന്റെ വെബ്സൈറ്റ് കാണിക്കാൻ അത് കാണുന്നില്ല.
ഇപ്പോഴോ?
അത് ലൈവായിട്ട് കേൾക്കുന്നുണ്ടല്ലേ?
സാർ ഇപ്പം കാണാൻ പറ്റുന്നുണ്ട് സാർ.
Income tax.
അതൊക്കെ ലൈവ് ആക്കിയാൽ മതി പ്രമോദ്. പ്രമോദ് സാർ ആ ഒരു ഫയല് ലൈവ് ആക്കിയാൽ മതി സാർ.
ഞാനോ?
അതെ.
Can I proceed?
Okay sir, it's okay.
Now, when you log into incometaxindia.efiling.gov.in, you will arrive at, or you will get a window like this. And this is a pop-up. You can close, or you must close this pop-up. And the right side, which is register yourself, login, and how to reset password, how to change your password, the different ways of e-filing, how to apply for PAN. This part and the right side part, the application for PAN, and this part we have already discussed in the last session. Now I want to introduce you the left side of this website. Now, before going to the left side, the website, what are the 3 parts in it? One is the list of income tax returns and forms available for e-filing. Second is tax information and services. Third is e-filing brochures. Now, before going to the first one, let me go to the second one. I'm going to click on the second one, which is tax information and services. Now you have to confirm. In that case, you will be taken to another website which is called Tax Information and Services. Now students or friends, this Tax Information and Services is a website where everything is mentioned. Whatever doubt you have with respect to PAN, with respect to TDS, with respect to refund, everything is mentioned in this website. You can go through this website, you can read, you can know how to reset password, how to reset, how to apply for PAN, everything is mentioned. Only thing is you need to click on this. Now, let's take with respect to PAN. Now, if you click on PAN, see how to apply for PAN. How to apply for PAN, how to change your PAN data, all these informations are available. Only thing is you need to read this one and do accordingly. Practical experiences, of course, it is required. Now, let me close this one. Now we'll pass on to the second one, which is called e-filing brochures. I'm going to click that e-filing brochures. Now, please see this. This is a guideline. This is a guideline for how to e-verify ITR, a guideline for how to reset e-filing password. There are 7-8 items which is given. Everything is mentioned. In fact, how to view the form 26AS, all informations are given. Let's take one thing, how e-verification ITR. Let's take the e-book. I'm going to view the e-book. When you view the e-book, you will get a book like this. This is a flip book. You can open it, you can read everything, e-verification with Aadhaar, e-verification using other modes, this like using net banking, using bank account, using demat account, using ATM, everything is mentioned here. You can close it, and if you want to go to The other one, go to the previous mode, click. If you want to reset e-filing password, again, everything is flipbook. And these are methods of, you don't have to beg anyone to do how to know how to do all these things. These are clerical works. These are simple works, even though, but first time you have to study this. So using Aadhaar OTP, e-filing through net banking, everything is mentioned. So we'll get flipbooks like this when you go to this e-filing brochures. There are different e-filing brochures which are given. There are flipbooks which are given, which guides you how to do various things. Now let's go back to the website. Now our main thing is list of income tax returns. List of income tax returns, which are called ITR. Now ITR is given here. The list of ITR is given here. Now let me take my presentation. Let me go do it. So now we have taken e-filing of ITR. Now, in e-filing of ITR, we have ITR 1, 2, 3, 4, 5, 6, 7, and 7. Now, ITR 1 we have already discussed who can opt for ITR 1 and who cannot opt for ITR 1. I'm not going to discuss that today. Now let's take ITR 2. ITR 2 can be opted by individuals and HUF. Now please note, ITR 1 to 4 are exclusively for individuals and HUF. Now ITR 2 can be opted by individuals and HUF who is not carrying on business or profession. Now it is there in the income tax website itself, who is not carrying on business or profession. But ITR 1 can be opted only by residents, whereas ITR 2 can be opted by residents and non-residents. ITR 1 can be opted by persons having income from salary. ITR 2 can also be opted by persons having income from salary. But if they have income from more than one house property, then they should go to ITR 2. If they have only one house property, then they should go to ITR 1. More than one house property and salary income, they can go to ITR 2. Please note, it can be opted by residents and non-residents also. Even if you have income from other sources, capital gain, and you own foreign assets, and your agricultural income is more than 5,000. If agricultural income is less than 5,000 and you own only one house property and you have income from salary, etc., you can opt for ITR 1. If agricultural income exceeds 5,000 and you have capital gain, you have more than one house property, you are a non-resident, etc., then you can go for, even if you are a resident, you can go for ITR 2. Now, ITR 1 is not applicable to directors. ITR 2 is applicable to directors. ITR 1 is not applicable to persons investing in unlisted shares. ITR 2 is applicable to those persons also. And ITR 2 is not applicable to business individuals, persons carrying on or individuals carrying on business. For individuals carrying on business, they can opt either, they have to opt either ITR 3 or ITR 4. ITR 3 or ITR 4. Now, filing of ITR. How to file these ITR? ITRs can be filed in two ways. One is online and offline. Now there are two ITRs which can be filed online and offline together. This is ITR 1 and 4. See, ITR 1 to 4, 1, 2, 3 and 4 is only for individuals and HUF, out of which 1 and 4 can be done either online or offline, whereas 2, 3, 5, 6 and 7 can be done only offline. You cannot do it online. There is no option for doing it online. Now, what is the difference between online and offline? The difference between online and offline, basic difference between online and offline is this one. Online means log into the website, select the ITR, fill it, submit it. So we can say login, fill, submit. That is called online. What is offline? Offline means fill the ITR, then login, then submit. So online means login, fill, submit. Offline means fill, login, submit. That is the basic difference between online and offline. Now, since we are dealing with ITR 2 and ITR 3, both ITR 2 and 3 can be filed offline only. Online ITR 1 and 4 can be filed online, but ITR 2 and 3 can be filed online only. Sorry, ITR 2 and 3 can be filed offline only. What is this offline filing? Offline filing means we are not online to the income tax website. Now, how do we do that? Now, the simple 4 steps are: download the applicable ITR, fill the form offline, generate XML, upload the XML. It is like this: download the applicable ITR, fill the form offline, generate XML file, upload it. Now let's go to the income tax website once again. Let's go to the income tax website once again. If you go to income tax website, let me go back to the income website. Now, in order to do the filing online, sorry, in order to do the filing offline, online you can go directly to this registered user, you log in, then you fill the select the ITR, fill the ITR. Now for offline filing, first what you need to do is go to this download and select this ITR preparation software. This is the first one, ITR preparation software. You have to select the ITR preparation software. The software is different for different ITRs. Now I'm going to click on that. You will be directed to this window. I'm going to continue with this, and the softwares are displayed here. The software changes with the assessment years. So I'm going to click select the ITR. Now the softwares are here. Now there are two types of utilities. Now what you need to do is, see, we are discussing ITR 2 and ITR 3. For ITR 2, there are two types of utilities. One is Excel utility and Java utility. If you want to, you can select any of these utilities. If you want to select this one, click on this. Clicking and selecting this one may take a little time. So what I'm going to do is, I have already downloaded this Excel file or Java file. I will tell you which file I have already downloaded. I'm going to show you how to select this one in my PPT. Now, the procedure is to e-file ITR using the ITR using the upload XML method. Now we are using the XML method because offline method you have to use these methods. Offline method you have to download the software first. The user must download either of the following ITR utility. The software we call it as utility. There is Excel software, there is Java utility, Excel utility and Java utility. Now, even though Java is simple and powerful, but still I would like to stick on with Excel utility. Now, for using Excel and Java, there are certain system requirements. This is what is system requirement. When you download the Excel utility or Java utility, the system will take care of that. The system will tell you what are requirement it needs. So you need to download all these things and you need to keep your system ready for that. Once the system is ready, you download the Excel file or the Java file. Now the Excel or Java file will be downloaded in as a zip folder. What you need to do is you need to extract the file from the zip folder. On the top of the zip folder, it will be shown extract. Click on that, you will get a file. You will get a file. Now, once you get the file, we will take the file separately. What you need to do is fill the file, fill the applicable and mandatory fields of the ITR form or ITR file. Now, let's go to that XML or let's go to that Excel file. First, let's take this ITR2. This is already open. Now, normally when it opened for the first time, it will give you an information that the green cells are for entering the data, and you cannot enter the data in any of the white cells. Only in green cells you can enter the data. And in certain cases, there are few information which are shown as mandatory in red letters. These red letters are mandatory. All the red letters are mandatory. When you download ITR2, you will arrive at a window like this. Excel file will be opened. This is an Excel file. This is a macro enabled Excel file. Now once you downloaded this, open this Excel file, you will have to enable the editing mode. It will ask you on the top, enable editing mode. You have to click that, then you can fill. Editing mode means you can fill the data on this file and the data will be saved. Now, when you click on this, when you open the ITR2, the offline utility, you will first arrive at the home page. Now, this ITR Excel file is an Excel file with around 28 Excel sheets. 28 sheets. See, on the first column, the number is given here. The number is given here. This means there are 28 different Excel sheets. All these Excel sheets are integrated or it is linked together. It is macro enabled. So the data entered in one can be captured in the other Excel sheet. This is an Excel file, is a linked Excel file. Now, this home page will tell you what is this Excel file all about, or what is ITR2 all about. ITR2 contains, first one, several. You can, if you see towards the lower part, you can see there are several Excel sheets open. or Excel sheets available. You can open these Excel sheets. Now, which all sheets are available in this Excel file? Now you can see it from the home chat, or you can see it from the home page. Let's take it as home page. Now, part A general, salary, house property. There are each Excel sheet is clearly mentioned here on the first column, and on the second column the name of the schedule is mentioned. Now the name of the schedule, salary, it is schedule S. House property, it is schedule XP. Capital gain, it is schedule CG. Then with respect to capital gain, rate of tax 112A, the schedule is named as 112A. See, this schedule is named as 112A. This schedule is named as section this schedule 115AD. This is other sources. This is carry forward loss adjustments. This is 80 DGA. So all the sheets are given with the respective names. Now first, you are using ITR2 because you have more than one house property. Let's take the case of take the case of a resident who is not having income from salary, but he has capital gains as well as house property. Now, in the home page, if you look at the right side, it says select the applicable sheet. Select the applicable sheet. On the first line, first row, there is no option for selection because it is in white cell. Second cell, it is option for selection. When you click on that, you will get two options, yes or no. If salary income is not applicable to you, you need to select no. Then white becomes N. Since now this is independent, these two columns are independent, not linked. Now this is you can select the sheet which you want. This is the sheets which you want to print. Now suppose you don't, since salary is not applicable and you don't want to print that sheet, so select no. Now look here, look on the lower part. On the lower part, the worksheets are named as part A general, salary, house property, capital gain. But I don't need this salary part or salary sheet. So you need to go to the right side. After selecting no, you apply. You click on this apply. When you click on this apply, see, look on the worksheet. The worksheet of salary is now hidden. All others are there. Assume that you do not have capital gain. You do one thing, go to capital gain, select capital gain, select it as no. Since it is not applicable, select it as no. Since it is not applicable, of course you don't have to print that one. Now click on apply. When you click on apply, see the capital gain worksheet also vanishes, or it is hidden now. Now it was by mistake you did that. You want salary back. What you need to do is go to salary, click here again, click here, select yes, and you don't want to print. Keep it. You don't want to print that salary schedule. Keep it as no. It's up to you to decide whether to print or not. Then now you click apply. Now salary is back now. Salary is back now. Now capital gain. You want to bring capital gain back? For you, I'm just this is for the students. I'm showing it again. You click yes and click on apply. Then capital gain is back. This is how you need to select the sheets you want. Suppose you don't have this. What is this? pass-through income PTI, or you don't have this AMT, click on, sorry, you don't have this ATD, you click on ATD, make it no, then make it no. ATD, you need to make it no, ensure that it is no is selected, then go up, click on this apply, click on this apply, then ATD will be disappeared, or it's not disappearing, it is hidden now. So you want to, for discussion, we want all the sheets, so I'm reselecting it, click it as yes, and I'm applying it, so ATD will be back now. And all the sheets will be given in this home page. Now, if you want to go to capital gain, you can click here. You will be taken to capital gain. This is a sheet for capital gain. You can directly go to capital gain. It is not necessary that you have to come down, click on this one, click on this tab. You can do it in the home page itself. This is how you operate the home page. I hope it is clear. So when you open ITR2, when you open ITR3, all offline softwares or offline Excel windows, or let it be Java windows, or I'm comfortable with Excel, so I'm doing that. So all offline Excel windows have this type of home tab. So in the home tab, you can control your heads, you can control the selections. So if you want to select, if you want to deselect one, or if you do not want one sheet, then you can click no, then you apply the sheet, with the tab will be disappearing, or it will be hidden there. Now, but the personal information you cannot hide. Just click on that. Try to click on that. See, you will get a note like this, a pop-up like this. The cell or the chart you are trying to change is on a protected sheet. So you cannot edit on that. That is why the white cells, see, if you want to click on this, the white cells cannot be altered. Only the green cells can be altered. You know, if you come across, go through, there are gray cells. Even the gray cells cannot be altered. Only we can make entries only in the green cells. Now, you have to make sure that this is your or you are passing, you are doing the correct persons, or you are doing your ITR, and ensure that you fill the part A general tab. So I'm going directly from this, or you can select the tab also, or let me go directly from this. This is the part A general tab. Now, part A general tab, there are general questions about your name, about the PAN number. There are so many things. Now, if you're going to fill this manually, it will take a lot of time. So can we do it automatically? Yes, we can do it automatically, which we are calling it as pre-filling. Now, how to pre-fill? Now, for pre-filling, again, we need to go to income tax website. Let me go to income tax website. This is income tax website. Let me go to income tax website. Let me enter in one of my clients' login ID. You need to enter the user ID, you need to enter the password. I hope the password is correct. Then you need to enter the CAPTCHA code. DLD7QK. I hope it is correct. Then login. The password seems to be wrong. Let me check the password. Let me enter the captcha code HYNJAY. Now continue. I'm going to skip this. You will arrive at this window. What you are going to do is you are going to pre-fill the XML. For pre-filling the XML, what you have to do is go to my account, download pre-fill XML. I'm not downloading it because it will show you the person's name and it's unfortunately it's mine only. So it's person's name and the other details. So I don't want to do that. Download XML file, and if you download XML file, the XML file will be stored in the downloads. Then what you need to do is you need to go to your Excel sheet. Let me go to the Excel sheet. We are discussing about ITR2. Now we want to fill all these things. Now, if you go to the right side, if you go down, there is an option which is called import general information, income, deductions and tax details from the downloaded pre-fill XML. So this pre-fill XML is downloaded from the income tax website. It contains all the details of the assessee, the PAN card, the PAN number, the address, the date of birth, all details, including the tax deducted details. All details, the 26 AS, the information which is contained in 26 AS, everything will be auto-filled in this one. So once you do that, for security reasons, I'm not doing that right now. Now, once you do that, all these fields will be filled. All these fields will be filled. You try that. You try that in your office, or you try that with your email ID and with your login ID and password. Once this is pre-filled, there may be a few areas where you need to enter the details. So you have to enter those details. And once it is over, you can come here, you can go to the right side and click on this validate. Click on this validate. Now, let me show you one thing. See, my name is AB. Now what I'm going to do is, I'm going to validate this sheet. If everything is correct, you will get a window showing that it is okay. Now here I have not filled the other data. It will show that these are the errors. These are the errors. These are the errors in this sheet. So if I want to move forward, but if I can fill the other sheets also, but let's fill one by one. Let's do one by one meticulously. Now, if I want to complete, let's complete one sheet, then go to the other sheet. Now, if I want to complete all these things, you have to fill all these details in the worksheet, in this particular sheet. Now, you close this. Once you enter all the details here, you can get a window, you can validate it, and you can go to the next one. The next one is salary. Now, it is a part of computation. So the main two part is over. The first part is part A in general. The second part is computation of salary. For each window, for each sheet, you have to validate. Then only you can know what is the error in that. Then if there is any error in that, you can correct the error and you can move forward. Now, the first one is income from salary. Now you need to fill all these things. Name of the employer, the fields that you want to upload is given in this light green shade. You must give the details of income from the details of the employer, address of the employer, all these things, and the nature of salary. Nature of salary means section 17.1. Section 17.1, if you click on this, is it basic salary or is it dearness allowance or is it house rent allowance, etc. You select basic salary. You select basic salary and go to the amount column and enter that. Now, after that, suppose you have dearness allowance, you select that one, go to this, go to the amount column and click. Then if you want to add more, you can click on add, automatically the rows will be added. Now, conveyance allowance, you can enter conveyance allowance, you can enter the amount here. If you want to add more, click on this, then click here, select the item which you want. Suppose children education allowance, you select that one, you enter the amount here. Then the nature of perquisite. Then coming to, when you come down, you can see the perquisite. The various perquisites are provided there. Accommodation, car, sweeper, etc. Let's take accommodation, enter the value here. Now if you have more, I'm taking one more. I'm taking interest-free loan on concessional, interest-free or concessional loans. You need to enter the data here. Like that, you have to enter each of the field wherever it is applicable. Now if you come down, you will, this column will show you the gross salary. Now coming to the allowances. Various allowances, like click on the various allowances here. Allowances exempt under section 10. Now assume that you have there are various allowances which are given. Now 1013A, house rent allowance. Now if you have house rent allowance, you can mention the amount here. You can add the rows, you can mention the amount here, or you can mention the amount of exemption here, and you will get the net salary. So when from the gross salary, you deduct those exemptions under section 10, you arrive at the net salary in column number or in point number 4 here. Now from the net salary, you can deduct the you can deduct section 16 deductions: standard deduction, entertainment allowance, and profession tax. Now these are, you need to enter those amount here. Standard deduction, you can enter the amount of standard deduction here, and if you have entertainment allowance, and if you want to add entertainment allowance, you have to add the allowance details here also. So let's add one more. let's take, choose whether there is entertainment allowance. Now, if you want to add entertainment elements, you need to add the entertainment elements here. Then this portion will be open, and you can deduct section 16.2 deduction. You can enter the 16.2 deduction here, and if you have paid profession tax, you can enter the details here. Now, this ITR is applicable to resident as well as non-resident. Please note, I forgot to tell that one. This ITR is ITR 2 is applicable to resident as well as non-residents. Now we arrive at, after deducting, we arrive at the taxable income from salary. Now once you complete this one, it's always advisable to go to the right side and validate it. If you have any errors, it will show there. So these are the errors because we have not entered few fields. Of course, there will be errors. You have to rectify these errors to move further. Since I'm not taking any data, the errors will be there. Once the data are filled, the data is filled, or the complete data is filled, then you can see that there will not be any error. Once it is error free, now you can go to the next head of income, which is house property. Now this ITR or this house property is selected because you have more than one house property which is let out or which is deemed let out. Now it is simple. You need to enter the details of data here, the address of the ITR, whether you are owner of the property, whether the owner is minor, spouse, others, or if you are owner, you can select self. If minor is the owner, you can select minor. If spouse is the owner, you can select spouse, etc. Now other details, if you want to enter, you can enter in that. Now if it is a co-owned property, you select yes or no here. Co-owned property, yes. Now if it is a co-owned property, if it is owned by more than one owner, you need to enter the details of co-owner here. If there are more than 5 owners, we can add co-owner by clicking on this. So any number of co-owners can be added. And you need to enter the details here. The green field, you need to enter the details. Co-ownership property. Now, type of the property. Now, type of the property means whether it is self-occupied or let out or deemed let out. If it is let out, let's take let out. Then you need to select let out. You need to enter, you have to enter the name of the tenant, the PAN of the tenant. Why the PAN of the tenant is shown here? The PAN of the tenant is shown here to cross check it with the tenant, if ITR is applicable to them also. Now, Aadhaar number of the tenant, all these details you have to add. If you have more than 3 property, you can add tenants here. If the property is owned by, if you're having a what you call a commercial building and the property is owned by 6 or 7, the property contains what you call office spaces, showroom spaces. We can add, and the properties, the showrooms are owned by 5 different people. We can add the details of the tenants there. Then, what is the gross rent? Then fill it one by one. gross rent receivable or lettable value. By applying the provisions of section 22 and 23, you can apply what is the gross rent receivable, or you can find out what is the gross rent receivable, what is the actual rent received, the tax paid to local authority, which is called the municipal tax paid. All these you can enter here, or you have to enter here. Now, the gross rent. Now here it is the amount of rent which cannot be realized, unrealized rent, and the amount tax paid to local authorities. You need to enter this. See, what we are studying is find out the gross annual value, then find out, deduct what you call municipal tax, you arrive at net annual value, and you deduct the section 24, the section what you call the gross annual value, then you deduct municipal tax paid, you arrive at the local tax paid, you arrive at the net annual value. From the net annual value, what you need to do is you need to deduct 24A and 24B, which is standard deduction and interest on borrowed capital. Now, we are arriving at 24, the gross annual value, the net annual value. Now, the annual value is nil if self-occupied, and otherwise there will be some value. Now, if it is a co-owned property and you are one of the co-owner, or I am one of the co-owner, show my percentage here, so that my income will be computed here. Then, the column G, it is deduction of standard deduction, which is, we call it 30% of net annual value. So from the gross annual value, you deduct municipal tax or tax paid to local authorities, you arrive at net annual value, and for that you deduct 30% of the net annual value under section 24A. Then after that, you deduct interest on borrowed capital under section 24B. Now, when you add these two, you will get the total of this, which is shown in I, which you might have already studied. So you have arrived at the net annual value. You have arrived at the deductions under section 24A and 24B. Now, if you have received arrears of rent, you can deduct 30%. You can take the standard deduction from that 30%, and you write the amount here, and the net figure will be the K. K will be the income from house property. Income from house property. Now, if you want to add more property, click on this property. It will provide you with more details, and you have to repeat the exercise. Now, the next field is the pass-through income or loss, if any. I will explain that later. After adjusting that, you arrive at the income from house property. After arriving at that, you arrive at income from house property. Now, once you complete income from house property, go to the top, validate it. Click on validate. Since we have not filled up, you will come across with these errors. You need to fill those errors. Then, after completing that, it is always suggested, after completing that, you can move to the next head. In income from in the income tax, section 15 to 17 is income from salary. Section 22 to 27 is income from house property. Then 28 to 44 is profits and gains from business or profession. That section is not here because this ITR is not for business or profession. It is other than business or profession. But you can have capital gain here. Now select capital gain. Now, in capital gain, you can have short-term capital gain. And if you come down, this is a short-term capital gain. Let me introduce this capital gain sheet to you. Short-term capital gain. Then you come down. You come down. You can see that it is B, long-term capital gain. B, long-term capital gain. Then, if you come down, you arrive at, you cannot see anything else. You arrive at the net. C is income chargeable under the head capital gains. That is short-term capital gain and long-term capital gain. Income chargeable under the head capital gains. Then, what is D is information about deduction claim. Deduction under section 54 B, D, E, C, F, G, D, A, G, B, H. Those deductions. Now, if you have claimed those deductions, you have to provide those details here. You can add rows, you can deduct rows, and if you come down, and if there is any setup of carry forward of loss, you can make that setup and carry forward here. This you know that short-term capital loss can be set off against short-term capital gain. Long-term capital loss can be set off against a long-term capital gain or short-term capital gain. Those you apply those rules, and you have to enter those values there. I will come to the capital gain once again. Now let me introduce this sheet to you. Now after completing this, you can get the tax with respect to see this capital gain date, capital gain and the respective date. Short-term capital gain at the rate of 15%, short-term capital gain at the rate of 30%, short-term capital gain, etc. You can see this, and there are columns like up to 15.6, up to 15.9, up to 15.12, up to 15.3, and then 15.3 to 31.3. What is this column for? This column is for calculating interest under section 234 A, B, and C. You need to provide the details here so that the calculation will be easy, or calculation can be done. Now here, once you are aware of what is to be given, go back to the top, fill it one by one. Fill it one by one. First, you are talking about short-term capital gain, then you are talking about long-term capital gain. Short-term capital gain, let me take the short-term capital gain first. Let me go to the top. This is short-term capital gain. Now, short-term capital gain, one, from the sale of building, from the sale of land or building, short-term capital gain. Now, as you know, full value of consideration, received or receivable, then stamp value or value of the property as per stamp valuation authority. Now, make a comparison of these two. Then you take full value of consideration. From the full value of consideration, you need to deduct cost of acquisition. As you know, cost of acquisition, then cost of improvement, then you deduct this what you call expenditure incurred wholly and exclusively in connection with transfer. If there are students in board, let me tell you, first you arrive at the short-term, sorry, it's not short-term capital gain. It will be arrive at the gross value, gross annual value. Then you make deduction with respect to the expenditure. You arrive at the net annual value. Then you deduct the cost of acquisition and cost of indexation. Now here it is given in a different way. Cost of acquisition cost of improvement, then expenditure is given. Anyway, this will give the net of C will give the balance of the gross annual value and the deductions. Then there is the capital gain. Now you want to arrive at the short-term capital gain. Now here it is clearly given. Deductions under section 54B. Now we have studied section 54, 54B, C, D, etc., etc. Now for short-term capital gain, this is applicable. Enter those details. Now short-term capital gain in case of immovable property. Enter those details. If you have more details, you can add more, or if you have more property, you need to add more, etc. So you arrive at this short-term capital gain on immovable property. Short-term capital gain on immovable property. So short-term capital gain is arrived because you sold that immovable property. You have to enter the details of the buyer, PAN of the buyer, Aadhaar number, percentage of share, etc., in this column. And if it is bought by more than one people or three people, you can add columns here. If it is bought by together by four people, you can add four here. You can add rows here so that the number of buyers can be added. Now, what is this one? This gives you, if you have more property, you can add that one. Now, the below fields are mandatory, or the below fields are you need to enter. Now, if you come, that is item number 1. Item number 1. Now, coming down, item number 2. From the sale of equity shares, where STT paid under section, which is taxable under section 111A. You keep on providing the details. Full value of consideration. There is amount column here on towards the right side. Since we have to see this description, I'm concentrating on this. Item number 2. You have to enter the cost of acquisition, the cost of improvement, expenditure incurred wholly and exclusively, etc. From the full, normally what we have studied is full value of consideration less expenditure, net consideration, then you deduct cost of acquisition, cost of improvement. Now, since deduction is, you can do here in the software, it is given together. And you arrive at short-term capital gain on equity shares, which is STT paid. The security transaction tax paid, which is taxable under section 111A. Similarly, you go through each item. If you go through each item, it will take time. So what I'm now itself, it is time is more. So you go through each item, and you have to enter the short-term capital gain or short-term capital gain or the details here. Now, if you come down, similarly, see all the details or whatever is required is asked in each row. You have to enter those one. In case of short-term capital gain, indexation is not applicable. Now, if you come down, there is B with respect to long-term capital gain. Long-term capital gain. Here also, first one is land and building, where full value of consideration, where we compare the stamp duty value with full value of consideration, and we apply this, what is that, 105%, etc. Those concepts we apply, we arrive at this full value of consideration, and from the full value of consideration, you have to deduct expenses to arrive at the net value of consideration, and from that you deduct this indexed cost of acquisition and indexed cost of improvement. Then the balance is here. Then you deduct deductions under section 54, B, EC, etc. Those details. See, if you have deductions under section 54, specify the details in D below. So we are in B now. See, this is B. We are in B. So if you go down in D, D is exclusively for the details of these deductions. These deductions means you are investing in some other assets. So you have to show the details of those assets in D. Specify the details in D below. If you go down, if you scroll down, you can see a column, a point like this. B is there, now C is there. After that, you can see D, you need to enter that. Now, it is long-term capital gain with respect to immovable property. And you can enter the name of the buyer. You have to enter the name of the buyer, Aadhaar number, etc., etc. Because if this is all these are for cross verifications. If you want to, if somebody else, if 3 persons jointly bought it from you, we can add the details by clicking on add buyer. Now, if you have sold more than one land, you can add the details of land and building here. Now come down, and if you can go through all these details, you can see that you have to enter all the details. Let me tell you, once full value of this is the case of sale from bonds and debentures. Then cost of acquisition with indexation, cost of improvement with indexation. Here also we have seen that cost of acquisition with indexation. Index, if you are a student, students might have seen that it is indexed cost of acquisition, indexed cost of improvement, etc. Now if you come down, you arrive at the total, and you will be taken to this sheet which shows the long-term capital gain with respect to debentures and bonds. I'm always concentrating on the left side. Right side, you have to enter the column, enter the amount. Now, third is sale of listed securities. Now, all these are long-term capital assets. Sale of listed securities and zero coupon bonds. Full value consideration, less expenses, less cost of acquisition, cost of improvement. But here it is given, everything is given together. So if students are involved here, see how the theory and practical is getting differed. Even though mathematically it is correct, even though you are studying that it is full value of consideration, less expenses, net consideration, less this indexed cost of acquisition, indexed cost of improvement, you arrive at capital gain, less section 54 deductions, you arrive at taxable capital gain. So here, cost of acquisition is deducted first, indexed cost of acquisition is deducted first, indexed cost of improvement is deducted second, then expenses incurred is deducted after that. Then total of this, you arrive at a balance, and you deduct the applicable, exemptions under section 54. Now, here it will be clearly given. Now, if you go down, this is from sale of listed securities. It is from sale of GDR, Global Depository Receipts. You do the practice, do the calculation in the same way, arrive at the balance, you deduct 54F, then you arrive at the long-term capital gain. Continue with that. Now you will arrive at different long-term capital gains. Now there is specific columns for rows for residents and non-residents, and you can go through that. We have a lot of sheets to be covered, so I'm just running through this. Everything is as we studied: full value of consideration, less expenses. But it is not in that order. Practically, this is what is the difference between practical and theory. Academical aspect and practical aspect. I believe students are involved here, or students are attending this seminar. Now, fortunately for each asset, the corresponding exemption is given here. So you need to apply those exemptions. Now, this is for non-residents. You apply the same concept for non-residents. You arrive at the long-term or short-term capital gain. You come down. You arrive at the long-term or short-term capital gain here. The amount of capital gain here. Then you come down, scroll down. You can see this is with respect to pass-through income or loss in the nature of long-term capital gain, pass-through income or loss in the nature of short-term capital gain. For final students, you may be aware of section 115 UA and UB, which is pass-through income means the income on which tax is not deducted. You have to pay tax on that. Now, from this current year onwards, this pass-through income or pass-through loss is incorporated. And point number 12 deals with double taxation avoidance agreement, section 90 and section 91, DTAA. Enter the details in that and come down. And here, D, this is what we discussed. D, information about the deduction claim. See, here we have seen that details of, I told you that the details of deductions under section 54, section 54 B, D, EC, etc. Those corresponding details you have to enter under point number D. Which is point number D? This is point number D. Details of deductions under section 54, 54B, 54 EC, etc., etc. 54F, etc. All these details, GB, GA, GB, etc. And for non-residents, you have to enter all these details here. So the calculation will be entered on the top, the details will be entered on the bottom side. You have to enter all those details. Now, if you want to set off and carry forward, set off of capital gain with capital loss. You want to set off current year capital gain with current year capital loss, or you want to set off the current year income with carry forward losses, or you want to carry forward current year loss. You have to enter the details in point number E. Now here, there is details with respect to short-term capital gain. Here there is details with respect to long-term capital gain, and you need to fill all those things. See here, the capital loss. Now, I believe you can see the cell which I click now, the selected cell. Here it is mentioned, capital loss to be set off. Fill this row only if the computed figure is negative. Now, set off means you are setting off current year losses. When you are setting off previous year losses, it is carry forward and set off. Now, you have loss under this. You have to enter the loss under this. You have to enter the loss under this. You have to enter the loss under this. Now, under this and this. Now, this is the rates applicable, etc. Now, what you have to enter here is the short-term capital gain, which is taxable at 30%, 15%. The short-term capital gain, which is taxable at other rates, and we can do the set-off. And now this column will give you the details with respect to set-off and carry forward, and information about accrual receipts of capital gain. Accrual or receipts of capital gain. Now, what is this column for? See, if you see this, it is 15.6, 15.9, 15.6, 15.9, 15.12, 15.3. Now, if you see this, you know these are the dates of advance tax. Now, you need to enter the capital gain entered during this particular period here, so that the system will calculate the corresponding, if there is any delay in paying tax, advance tax, the system will calculate the corresponding interest under section 234A and B. For that purpose, you need to enter the details here. Now, once capital gain is over, your salary is over, your house property is over, your capital gain is over. Please note that this ITR 2 is not applicable to those associates, those individual or HF having business income. So the business is missing here. Now there is two schedules, Schedule 112A, Schedule 115AD. Now Schedule 112A is cases where incomes are taxed at special rates. Schedule 112A is which is taxed at 10% without indexation. So if you have such capital gains, you need to enter those details here, those values here. You can add rows here. Enter the number of rows. If you want to add 4 rows, enter 4 and click OK. 4 rows will be added. Still, you want to add more, you enter the number of rows. 8 rows you want to add, click enter 8. The 8 rows will be added. Like that, you need to enter the details here. So these two schedules are with respect to capital gain. So once you enter these details, the corresponding cells will be pre-filled here. Corresponding cells will be pre-filled here. Now, so along with capital gain, you will fill up Schedule 112A. 112A is listed securities which is taxable at 10% without indexation. Now, Section 115AD. Now, Section 115AD is applicable to non-residents. So you don't have to worry about this. Everything is clearly mentioned here. And along with the Excel utility, what you need to have is to study ITR filing. Along with the utility, you need to have patience. Because you have seen that there are 28 worksheets. We are going to the 28 worksheets. Once we have gone through the 28 worksheet, once ITR 2 is over, when ITR 3 contains almost same worksheet, so that we can skip that. Now, OS is income from other sources. Fill those details. Gross income chargeable. You enter the details here. You can enter the details here, and you can enter savings bank, deposits, all these details you can enter here. Wherever there is green field, you can enter here. Wherever there is white field, it will be pre-filled, or it will be taken from other sheets. And the gray field, you cannot enter anything there. And income from letting of machinery and building. You are writing the gross amount here. You are not writing the expenses. The expenses deductible under Section 57, you are not writing here, because you will be provided with different columns for reducing expenses. So here, see, gross income. Normally what we do is gross income, theoretically gross income less expenses, you arrive at the net figure. But here, be practical while doing this practical session. So gross dividend, interest gross value, everything is gross value. So you can go through all these fields. It is impossible for me to go through all the fields. You see, A is dividend, B is interest, which is gross, Now C is rental income from machinery, plant and etc. Or building and plant together with letting out of factory etc. Then income from the income of the nature specified in section 56 to 10, very important. What is section 56 to 10? Section 56 to 10 is with respect to gift or which is transfer without adequate consideration, transfer of capital asset without adequate consideration or without free of consideration. We generally call it gift. Item earlier it was now it is 56 to 10. Those items you have to add. Then you can add the details, any other income you specify here, family pension, etc. And the green fields are for you to add more details and add the corresponding amount, and you can add rows here. How many rows you want to add? You want to add 7 rows. You click, type 7, click 7 rows will be added there. Now we come down. Income chargeable at special rate. Winning from lottery, which is chargeable at what you call 30%. Then lottery, crossword puzzle, etc. you need to add here. Then income chargeable under section 150 BBE, which is section 68, 69, 69 ABC, A, B, C, D, E, etc. A, B, C, D, which is unexplained cash, unexplained investment, unexplained money, etc. You have to enter here. Then accumulated balance of recognized provident fund under section 111. All these you need to add one by one, and wherever there is we need to add more rows, you can add more rows here. Now other income chargeable at special rate. Now come through. Now pass-through income in the nature of income from other sources chargeable at special rate. Now what is this pass-through income? I told you, etc. That is with respect to business trust. If intermediate people are hearing me, so or you can study it at final level, which is dealt under section 115 UA and UB, which is pass-through income with respect to business trust. Now you can enter those details in this one. Pass-through income means the income is not the basic meaning is tax is not deducted. It is given fully to you. It is taxable at you in your hands. It is not taxed at any other person, or tax is not deducted at source. Now, if you come down, deduction under section 57, point number 3. We have completed point number 2, point number 3. Deduction under section 57. Why I am going in detail in ITR 2? ITR 3 contains almost similar worksheets, so that we can skip that one. Now ITR 3, sorry, not ITR 3, sorry, point number 3. Deduction under section 57. So what all expenses you have incurred, to earn the income can be deducted here, including depreciation. If it is with respect to factory building, etc., factory building with machinery, etc., you can claim depreciation, and you need to write the total. You need to enter the amount here, then enter here. The total will be computed here. You come down, income from the activity of owning and maintaining race horses. You need to enter here. If you go through one by one, you can see the difference here. You can see the different columns and enter the columns accordingly. Now section 58, which is the expenses, conditions for restriction on deduction under section 57, or amount which are not deductible. Amounts which are deductible is provided under section 57, and the conditions or restrictions are provided under section 58, which all deductions are restricted to be are restricted. You have to enter there. And deemed income under section 59, you need to add it here. you have deemed income under section 41 with respect to PGBP, profits and gains from business or profession, and here 41 is with profits and gains from business or profession. This is another provision, section 59, which deals with deemed income, or we call it profit chargeable under section 59. If students are hearing me, you call it deemed income under section 59, and in practical case in ITR, they are calling it as profit chargeable under section 59. Now here we arrive at income from other sources. Now here also you enter the details. Dividend income chargeable under section 115 BBDA. Under section 115 BBDA. Now dividend income means income which is provided under income which is defined under section 222A to D and 222E, which is what you call advance provided to what do you say under section 220, advance provided under section 222E. Now income by way of winning, etc. Now whenever you are writing, providing details here, see 15.6, 15.9, 15.12, 15.3. These are with respect to advance tax. If there is any advance tax, if there is any delay in paying advance tax or default in payment of advance tax, section 234A and B are applicable, then you have to, then the system will calculate the interest accordingly, and thereby completing income from other sources. Now, this is, next one is CYLA BFLA, which is called, let me click on this, which is current year loss adjustment and brought forward, see here, it is mentioned, brought forward loss adjustment. That is why it is called BFLA, brought forward loss adjustment, current year loss adjustment. We call it set off and carry forward of losses, which is dealt under section 70 to section 80. Now here, under each row, loss to be set off, income of the current year, house property loss to be carried forward, house property loss for the current year, now less debt loss from other sources, then current year income remaining after setting off. This will give the income remaining after setting off. Now your section 70 to 80 will be taken care under these cells, and you will get the net year's current year income after setting off. And house property loss can be set off against income from salary also. That is why salary is written here. If you have income only under salary, you will not select ITR 2, you will select only ITR 1. Then there is no question of ITR 2. And if you have income from house property and you own more than one house property, and you have income from salary, you will select ITR 2. And also, if you are having one house property and you are having income from salary, and if your income from house property is a loss, if you are incurring loss from house property, if you want to set off and carry forward, then you have to select ITR 2. So house property, short-term capital gain, everything will be mentioned here. And if it is loss in the previous pages, it will be set off. So now here it will be mentioned, total house property loss to be mentioned. The current year income will be mentioned in column named 1. The loss will be mentioned in the column named 2. Then loss from other sources will be mentioned in loss 3. Now capital gain will not be mentioned here because short-term capital gain can be set up against short-term capital loss can be set up against short-term capital gain and long-term capital gain, and long-term capital loss can be set up only against long-term capital gain. So here, set off with other sources. So you cannot set off with the income with short-term capital loss or short-term capital gain or short-term capital loss. So it will be taken separately. So it will be mentioned here. Now, Here, short-term capital loss can be set off against short-term capital gain and short-term capital loss. Short-term capital gain and long-term capital gain. But short-term capital gain can be utilized for setting off all these things. Now, what is this ash field here? Now here it is house property, and here also it is house property. Then current year set off is restricted to 2 lakh. Now you come down after setting off. Now you will be taken to brought forward loss adjustment. Now brought forward loss adjustment, the loss of earlier years which are to be brought forward. Brought forward loss, you need to enter the brought forward loss here under the head salary. There you cannot have loss, hence it is inactivated. So you can write the brought forward loss here, but you have to write the corresponding head's income because brought forward loss can be set off only against the corresponding head's income. Now you enter that one. You arrive at the bottom of that sheet, and the current year income remaining to be set off will be brought forward, and you will get it in this sheet, in this cell. So thereby you completed this current year loss adjustments and brought forward loss adjustments. I cannot reduce the speed less than this because it's already, I believe it's already 8 o'clock. We don't have time, but I'm sure we'll be completing this because ITR 3, the columns will be almost similar to ITR 2. Now taking this one, details of carry forward loss for future years. Now you need to, this will be pre-filled, or you need to enter here. The green field you have to enter here. This is house property loss. This is short-term capital loss, long-term capital loss, winning from lottery, etc. And each sheet, I forgot to tell you, each sheet you have to validate. There is a validation tab which is to be enabled after completing each sheet, so that you can find out whether there is any error or not. And you must see that you must, and once again I'm telling, along with the Excel utility or Java utility, you should have the patience to listen all these things, because it is a lengthy process and you have to do it practically. Then only you will come to know what is the practical difficulty you are facing. For me, it is easy to explain it right now, and it is somewhat easy for me to do it right now because I have practical experience. For those students, you will come across a practical difficulty when you do it practically. Now, it is details of losses to be carried forward to future years. You need to enter. So these are the details of losses which are to be carried forward to the future years. Then come to DI. DI in ITR 1 also we have this DI column. We have this DI cell. We have this DA sheet. What is this DA? DA details of investment. Details of investment. Why it is important? Now here in the cell which I have selected, deduction attributable to investment or expenditure made between 1/4/2020 and 31/7/2020. Out of column 2. Now details of investment. Why is this important? Because of the extension of time. The 31/3 is extended to 31/7. So you have to show it separately. What investment you have done in till 31/3/2020, and after that during the extended period, how much you have invested. So you have to enter those details separately here. And we have also with respect to details of, see, under section 54, you can claim exemption if you invest the money in the corresponding assets. So if what amount you have made in the assets, or the amount utilized out of capital gain account scheme, I believe I forgot to tell that if you are not able to provide, if you are not able to invest in the corresponding assets for claiming exemption under section or deduction under section 54, 54 series, you can invest in capital account scheme and you need to invest prior to the specified date so that you can claim deduction under section 54, etc. So, what is the amount utilized out of capital? Utilized out of capital account scheme? What is the amount utilized between? You need to utilize it during the previous year. Now it is extended to for this current year because of the specific situation. It is extended to 39/2020. So, what is the amount utilized between these periods? And you come down and fill it. Now come to ATD. Now please note, I believe you have attended the last week session regarding ISR 1. We have discussed in detail about the chapter 6 and directions. I am not going to discuss that one. So you can enter the details of HED medical, HED donation, HEGGA with respect to rent. Here we have discussed those in detail in the discussion when we discussed about ITR 1. Now, next is with respect to AMT. AMT is section 150 JC. Alternate minimum tax. For companies, it is minimum alternate tax under section 150 JB, and for other associates, it is 150 JC. Alternate minimum tax. Now, if alternate minimum tax is applicable, you need to enter that. Now, there are conditions for applying alternate minimum tax. Generally, for few associates, very few associates, alternate minimum tax will be applicable, and hence, when practical session, when it comes to practical, we generally may not apply AMT. Now, this is AMT means alternate minimum tax credit, the credit to be carried forward, or utilization of credit, or carry forward, setting up of credit, or carry forward of credit under section 115JD. That is AMTC, AMT alternate minimum tax credit. Now coming to chapter 6A. Chapter 6A deduction. Out of chapter 6A deduction, 80D, 80G, 80G are specifically dealt, already dealt. Now, other sections like 80C, etc., which we have already discussed under action 1. We are not going to discuss it. You can discuss. You can claim deduction under chapter 6. You need to enter those details here, and you need to enter the details of investment under DI, schedule DI, which is cost. Here in this DI, you need to enter those details, and you need to enter the details of chapter 6A in this, and deduction. So the investment between 2002 2020, the period of investment is extended because of the pandemic situation. Now, this one, SPI. SPI means clubbing of income. Now we are going to take up with the section 60 to section 65. Clubbing of income with respect to spouse, minor child, and whom? The other person who is that son's wife. Now here, spouse and minor child, you have to those details, name of the person whose income you are including, PAN number of the person, etc. You need to enter the relationship, etc. You need to enter here. Now the head of income under which it is to be included. Now if you select the head of income, it will go to that head. You are giving here the details. Now the head of income, if you are giving here, it will go to that head. Then you need to validate those heads. Can you hear me?
Yes, sir.
Yeah, yes.
It's audible.
Thank you. Yeah. Oh, thank you very much. Now, after this one, you can go to this is with respect to income chargeable at special rates. Here, SPI is specific income or special rate income or special person's income. It's the correct word is special person's income, specified person's income, which is club. Now this is special income, which is charged under special rate. All these are details which are to be provided. All these are details which are to be provided. Now, after completing this, go to this EI. Let's click on this EI. The EI is exempt income. Now the sheets are named in such a way that it is easy for you to understand. Exempt income. Exempt income. See, in case of dividend, exempt up to 10 lakhs. Dividend domestic company exempt up to 10 lakh. So you need to provide the details of exempt income here. And if you have more, you can add rows here. Now, how many rows? If you want to add 4 rows, you add 4 rows. 4 rows will be automatically added. And similarly, other exempt income. You can specify other exempt income here, which is exempt under section 10. And income not chargeable to tax under DTA. DTA means double taxation avoidance agreement. If any of the finance students are hearing me, section 90 and 91 deals with double taxation avoidance agreement. You can add the details of those income which are tax doubly in different countries, and you need to enter the country code here. If it is US, you can enter the details of the company here. Then the article number of under DTA, then head of income, under which head it will come. House property, capital gain. See, salary, house property, capital gain, income from other sources. PGBP is missing because if there is PGBP, it will not be ITR2. Now, this is whether TRC. TRC means tax residency certificate is obtained. You need to tell yes or no. And same way you can add rows here. And PTI means pass-through income. And that is specifically with respect to business trust, which is just under section 115 UA and UB, which we already told. Pass-through income, basically it means on which tax is not deducted or any tax is not deducted at source. The tax will be deducted from the receiver only. Now, once you complete that, go to this PTI. PTI is pass-through income, which we were discussing on these schedules. PTI, pass-through income. Enter the details of pass-through income. See, pass-through income, details from business trust or investment fund specified under section 115 UA and 115 UB. So under the head house property, now from business income, if you are getting different incomes, you need to enter those details here. These are only incomes these are only information heads of income. Now you have the option to select here, but if it is 115A, select 115A. Then if it is once 115A is selected, you can select 115B here. And under section 115A, what are those incomes on which this provision is applicable or pass-through provision is applicable? Now, after completing that, you come to the next one. FSI. FSI means foreign source income. Details of income outside India and tax relief. Details of income outside India and details of tax relief. Tax relief is under double taxation avoidance agreement under section 90 and 90A. We know it is unilateral relief and bilateral relief. Those details those details of income and the country code, etc. You have to enter here. The details of FSI on which foreign source income on which you are claiming double taxation avoidance agreement. After entering that, after entering each sheet, you validate one by one so that you can go error free from one sheet to another sheet. Now, you may not be doing in this order. In some cases, see, some cases, a sheet after that, you have to enter first because the sheet after that will be captured to the earlier sheet. So you need to enter the subsequent sheet so that the entries are captured in the former sheets. Now coming to schedule TR and schedule FA. TR is tax relief and this one is FA is details of foreign assets entered. Tax relief under section 90 and 90A and 91 is with respect to bilateral relief and unilateral relief which you are covering in double taxation avoidance agreement. And if intermediate students are there who are hearing me, you will get the opportunity to study double taxation avoidance agreement in the final portion. Now, after that, details of foreign assets and income from any other source outside India. You have to enter those details here. You can enter the details only if the field is green. Only if the field is green. You cannot enter the details if the field is white or gray. Now, these are only informations. Now, details of foreign custodial accounts. Now, why these are entered is if you hold any assets outside India or if you hold any accounts outside India, you are liable to file the return of income. Now, for that purpose, if you are filing the return of income, because of that, you need to enter those details here. You can add rows, etc. Now, once you enter those details of financial interest, details of immovable property, read one by one. We do not have time to go through each one. You read one by one. If you have more details, add rows, etc. And the first sheet, TIN, Tax Information Network. If you go to that website, you can get the details of all. You can get the information what is to be done while doing filing of ITR. In fact, that TIN, Tax Information Network, that site is called a study material of income tax website. You can get all information from there. Now coming to schedule. This is for civil code, etc. Normally it will not be applicable. Then schedule AL. AL means details of assets and liabilities. Go through this one, assets and liabilities. If you have assets and liabilities outside India, or the details of assets and liabilities applicable in case where the total income exceeds ₹50 lakhs. The total income is less than 50 lakhs and you have only one house property and salary income, you might have selected or you will select or you should select ITR1. In other cases, if the total income is exceeding 50 lakhs, you need to select ITR2. Now, you need to provide the details here. Now, you can add or delete rows, and after completing, you need to validate. You need to, sorry. Is it visible right now?
Sir?
Can you see the?
Hello?
Can you see the files which are shared?
So we can see the Excel file, sir.
Yeah. Excel sheet only. Yeah.
Yes, sir. That
Now,
is
that is visible. Now, schedule A, details of assets and liabilities you have to enter. Now, when you are selecting this Excel utility, the most thing you need is patience. But unfortunately, you have to have patience because these ITR 2, ITR 3, ITR 5, 6, 7, you have to file offline only. So offline is not that easy as online. So you have to be patient. Now, after filling all this, you arrive at, so part A is over. Now you come to part B. Part B is TA and TTA. TA means computation of total income. The computation of total income from salary, income from house property, capital gain. Yeah, everything will be entered, will be captured from that sheet because it is white. You cannot enter here. Try entering. You cannot enter here. So you arrive at the total headwise income. Then if you go down set of adjustments, then set off of brought forward loss, you arrive at gross total income. Then you separate the special rate income so that special rates are taxable. Income taxable under 111A, 112, 112A, etc. Then you arrive at deductions under chapter 6A and it will be automatically captured from the 6A schedule, then total income. Then below that, computation of tax liability on income. Now you need to compute the tax liability here. Now for computing the tax liability, here see tax payable, it will be computed here. Once it is entered, once everything is entered, you can go to the left side of this sheet. You can go to the left side of this sheet. Once everything is entered, I hope everything is entered. Once everything is entered, you can go to the right side of this sheet and you can click on this calculate tax. Tax will be calculated automatically. Once tax is calculated automatically, you will get how much amount you have to pay. So interest on 234 ABC, fees under section 234 F if applicable, everything will be entered. Now you need to enter the details of bank account, etc. Those things we have already discussed under ITR 1. Then come to the ITR sheet. Now, once you calculate the tax payable, what you need to do is you need to go to Pramod sir. Please hold on, please. Hello.
Sir, after this we can stop.
So,
After this we can stop, sir. Okay, sir.
yeah, okay, fine. Now, yeah, we will stop here. Once you find out the income tax computed, and once you pay it, you will get the BSR code, etc. You need to enter here. Once you enter all the details here, and if you go to part B, you will find that the net tax payable is automatically nil. And net tax payable is automatically nil, and you, after considering this TDS, etc. Now, once it is done, you enter these details, verification details here. After that, what you need to do is, you need to you need to do this exercise. What is that? Tax payment is over. You need to validate all the tax. Now we have already validated all the tax. We paid tax. Point number 2, we paid tax, generate and save the XML. Once the XML is saved, you need to log into ePortal. I believe the time is over. You need to log in to the ePortal. File, click menu, select income tax return. Then select the assessment year, select the ITR form, and file. Select the file type as original bar revised return. Select the submission mode as upload XML. You upload it. After uploading it, you submit the ITR. Once you submit the ITR, your filing is over. Once filing is over, the next thing what you need to do is you need to verify or e-verify the income tax return. Verification you can do in different modes since time which we have already discussed. Either you can take a printout of that and you can verify it manually, or you can verify it electronically. You can verify it manually or you can verify it electronically. Once it is verified, the sharing is the filing is completely over. And almost similar steps you have to continue for. You have to take for ITR 3. Now for ITR 3, the only difference is it is business income is included. Now let me take 5 minutes to extend that. For ITR 3, what you need to do is you need to unfortunately I have here ITR 3 also, but unfortunately we don't have time. So let me explain you. ITR 3 is business, so balance sheet and profit and loss account we have to enter it here, and all these ATC details or chapter 6 of deduction, everything you have to enter it in ITR 3. The only difference is you have to upload. Yeah.
Are you still sharing the screen?
No, I'm not sharing the screen.
But you are
because you said
you are not on live now. That is the thing. I will try once. Okay, sir. 1 minute. There is some problem with the net. That is why.
You can hear me?
Yeah, we can hear, but I don't know what about the audience. Let me check 1 minute. See, carry on, sir. 1 minute. I will talk. Goba. There is something problem with the network, I think.
Oh, fine. But you can hear me, right?
But I can only hear. I think these participants cannot maybe not be able to hear.
Oh.
That is the problem.
Okay, then we'll wait it start.
No, in 1 minute, sir, let me try once more to make it. I think these participants cannot maybe not be able to hear. കിട്ടുന്നുണ്ടോ? കേൾക്കുന്നുണ്ടല്ലോ? Sir,
it's audible, sir. Sir, it's audible, sir.
Okay, please carry on, sir.
Okay, sir. I will just take 2-3 minutes and I will finish it off.
Okay, sir. Okay.
Now,
Sir, it's audible.
with respect to IT, okay, fine. Thank you. Now, with respect to ITR 3, the only difference is you are including business income. you are including business income. Now, with respect to business income, you have to upload. You have to upload your balance sheet and profit and loss. It is not uploading. You can. You have to create your balance sheet, or there is a field for there is a worksheet for creating balance sheet and profit and loss account, and you have to fill that one, and the rest of the sheets will be the same. And in the next series, in the 4 and 5, 4 is also with respect to individual, and 4 is with respect to presently base of taxation. And for half an hour, I will just take this ITR, the balance portion. I will just briefly discuss on ITR 3, and we will pass on to ITR 4 and 5 in the next week. Since it is time, and I would like to conclude here. I believe you enjoyed last week. I got a complaint that I was moving very fast, and so deliberately I tried to reduce my speed in this session. I hope I was. I believe that I was not dragging too much. I hope you enjoyed it. Thank you very much. Thank you, Trivandrum chapter, all the members of managing committee, staff of Trivandrum chapter for supporting me. Thank you very much. It's Abraham Thomas of Abraham Thomas and Company, Costa Commons. Thank you very much.
Okay, thank you, sir. Good evening, respected members and dear students. I thank CMAC Abhi Thomas for spending such a lot of time with us, enlightening us on. And his next program will be on 17th. That is Saturday, next Saturday. I hope all will come and join and enlighten yourself on these matters. Now I will end this program with our institute anthem. Thank you.
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय ॐ शान्ति शान्ति शान्ति।
Thank you, sir.
Thank you, Abhi sir. Thank you, Pramod sir.
I once again thanks everyone. Thank you, Jaya madam, for helping us in this. Can we end the live now?
Yes, sir. Thank you, Abhi sir.
Thank you very much.
Good
you for
night,
this
sir.
opportunity.
Everyone.
Okay,
Thank
Good night. Good night.
Good night, sir.
Good night.